Hello and welcome to another daily market update. My name is Ben and today we want to take a look at the Warner Brothers Discovery chart. It's a stock that's currently in a trading area or at least very close to a trading area. So it's going to be very interesting to take a look at this one because when we're close to trading areas, close to support areas, this can always be an opportunity. So we are here on the Market Intel website, dailymarketupdate.com. As I say regularly, please feel free to use the link in the description. You can sign up here completely for free and you get all of these daily free Elliott-Wave market updates. We cover a range of stocks, cryptos, and so on. So feel free to check it out if you're interested. It is really a no-brainer because it's completely for free. Now let's click here on the stocks section. By the way, let me know in the comments which stocks or cryptocurrencies or other assets you want me to analyze, and then we can build that in going forward. Just interesting to know what you prefer. Also, please hit the like button, subscribe, and leave a comment then about your favorite stock, crypto, or gold, silver, other assets. Okay, let's take a look at the stocks here. You can see on the chart here the ones that have recently been updated. And the most recent one is Warner Brothers, ExxonMobil, Caterpillar, IBM. So if you're interested, feel free to check it out. We click on Warner Brothers Discovery. Here you can see the written analysis and we click on the chart. I'm going to take you through this because I find this is quite an interesting chart. Obviously, we're very close on this chart to a potential long-term low. It is at the moment too early to confirm that we've already really bottomed and that we've actually struck a long-term low. You might remember from previous videos that I've made here on this channel that the long-term trading area or support area is defined between $3.90 and $7.26. So these are also the box coordinates that you would have received had you registered on the website. And you will always be kept up to date about these. Now, you can see here that this is still defined unchanged. It's between the 100% Fibonacci extension and the 161.8 extension. So very, very common target area there, these Fibonacci extensions. And the idea is that we're very close to this wave 2 low. Now, you need to understand with Elliott-Wave, especially pullback traders, are usually looking for these wave 2 pullbacks because once we are looking at the end of a wave 2, we can get ready for a third wave rally. And these third waves in Elliott-Wave, generally in markets, but the Elliott-Wave analysis helps us to understand the market structure. So we know that a third wave is typically the most relevant wave. It's the strongest wave in a trend, the strongest wave in a cycle. We normally want to get positioned for these waves, for these structures. So it typically makes sense to look for potential entry opportunities, not in the third wave, ideally before it starts. There will always be buy the dip opportunities also in a third wave, but these third waves, because they are so strong, it's all about capturing the main element of that trend when investing or trading. And ideally, we are positioned before that third wave starts. Now, you can never promise if it really starts, right? It's all based on assumptions. Therefore, we're looking at the larger Elliott-Wave structure. When we can identify an uptrend, then we're looking for pullbacks in these uptrends. When it's a deep pullback and the Elliott-Wave structure supports it, we typically assume it's a wave 2. Could be something different. In this case, we assume it's a wave 2. So, and from there, a third wave rally should then actually start. Yeah? So at the moment, however, as you can see here, the pullback is seen as quite a complex correction. As a WXY structure within the Y wave, we have a very, very complex WXYXZ correction. And the last rally here from the most recent low is only in 3 waves. So that doesn't yet give us a very good idea that this low is already in. Most likely we go a little bit lower. That's the idea. Possibly to touch $7.26 or $5.98 or maybe even $3.90. Again, at the moment, this is just a box. This is a zone where we expect the price to turn around. Once we can see the first, let's say, small impulse to the upside, and we can confirm that the low is already in. But the idea is to, proactively look for entry opportunities in this zone. Now, if you want to trade this, you could, for example, set a stop loss 1% below the lower boundary line of the zone, which would be 1% below $3.90, because we know that typically below these boxes, when the price sustains below them, then the idea, the setup, the trade idea is usually not going to work out. Now, it's all probabilities, right? So then, as soon as this wave 2 is over, the expectation would be that the price gives us a real surge above this $12.70 range here, or $12.70 breakout point, this X wave high going forward. So we would like to see a third wave rally that breaks above it and then takes out the next swing highs, eventually reaches $20, $30, $40. So there's plenty of upside potential there. It is speculative. I have to say that as well. This is a very speculative chart. It doesn't really have the long-term chart history to really give us a very, very clear chart, okay? Because we've had a very, very long downtrend on this chart. However, it's from a reward to risk point of view, really, really interesting. And, as traders, investors, all we can control is really our entries and exits, and to try to position ourselves in a way that we can use those high reward, low risk trading opportunities. Obviously, always focusing on risk management as well, which is why we need to stop. This is sort of what we're looking at. That means short term, a little bit further downside expected, but it's worth to have this one on the watch list, or maybe actually look for entries in the box. That's obviously up to you. We can only really provide the analysis. You have to then convert that over to your portfolio, understand in terms of your personal risk profile, what does that analysis mean for you and your portfolio and your trade management, your risk management, and you can choose to act on it or not. That's entirely up to you. So yeah, hopefully you like the update about WBD, Warner Brothers Discovery. If you did, please use the link in the description. Also, leave a like, subscribe, leave a comment. Thank you very much. Bye-bye.